So the workplace is changing faster than ever. Remote work, flexible hours, and yes, the rise of independent contracting. And if you've recently been offered contract work or you're considering making the switch, this episode is for you. With more companies leaning towards flexible workforce models, a lot of professionals are facing a new decision: traditional employment or independent contracting. The challenge isn't just choosing between them, it's understanding how each option actually works in today's economy. And let's be honest, most of the advice out there either oversimplifies the differences or it makes everything sound terrifying. So on today's episode of Money Talks with Njideka, we are going to look into the evolving workplace landscape. We're going to explore how independent contracting is reshaping careers, and we're breaking down exactly what you need to know about both W-2 and 1099 income. Hey everyone, I'm Njideka, a financial advisor helping professionals and business owners take steps towards laying the foundation for generational wealth through smart finances, tax, and business strategies. So before we dive in, if you find value in this content, please don't forget to hit the thumbs up button, drop a comment below, and share this video with someone who needs the information. Your engagement helps more people discover my channel. So let's get into our talk about why we are seeing this shift. Companies are increasingly offering contract positions. It's clear that the traditional 9-to-5 workplace is transforming. On one hand, companies are realizing that they need flexible talent pools, and on the other hand, professionals are discovering that they want more control over their work lives. And this isn't necessarily about one option being better than the other, it's understanding which structure better aligns with your goals and lifestyle. So we're seeing this especially in the technology and IT consulting world, where companies need specialized skills for specific projects. We're seeing this in the healthcare services world, especially with the rise of telehealth and temporary staffing needs. You even have temporary doctors staffing. In the creative industries, where project-based work is becoming the norm, and in professional services as companies are seeking more and more specialized expertise. And this shift isn't just a trend, it's a fundamental change in how work gets done. Companies can scale their workforce up or down based on the demand, while professionals can build diverse portfolios and potentially earn more. But the key is to understand how to navigate this new landscape. That is what is going to be crucial for your success. So let's break down what being an independent contractor really means in today's economy. So when you receive 1099 income, congratulations, you are now a business owner. Essentially, you are running your own business. Yep, even without a formal business license or an LLC, the IRS sees you as an entrepreneur. Even if you didn't realize this needs to be your first mindset shift. And it might sound intimidating, but let's go deeper into what this actually means in practice. So today, we're going to touch on a couple of things: business structure, income treatment, business operations, and tax opportunities. So as it relates to being a 1099 contractor, the first section that we're going to cover are the business structure options. With doing 1099 work, you have several ways to structure your business. So I'm going to walk you through each one and explain why the choice matters. So path one is sole proprietorship. This is your default option, and it's the simplest way to start. You don't need to file any special paperwork. You are automatically a sole proprietor when you start doing business. But here's what you need to know. Your business and personal assets are one and the same, meaning your personal assets could be at risk. Next, when you file taxes, you're going to report your business income on the Schedule C part of your personal tax return. Also, you are going to pay self-employment tax, that 15.3% on all profit that is made. Now, this structure is perfect for testing the waters, but it may not be the best long-term solution. Path number two is LLCs. So an LLC is a limited liability company, and it adds a layer of protection and flexibility. It creates separation between your personal assets and your business liabilities. It can be taxed as a sole proprietorship if you're doing the single member LLC, or as a partnership if you're doing a multi-member LLC. It adds credibility with clients, especially when submitting your W-9 form. And it also requires a state registration, annual fees, and annual reporting. It could be a great middle ground option for growing businesses. Path number three, the S Corp. Now, this is not a business structure. It is a way that you get taxed. I want to be very clear about that. You don't structure your business as an S Corp, okay? Now, but this is where things can get very interesting, especially for higher income earners. So this tax class allows you to split income between salary and distributions. So this has the potential to reduce your self-employment tax burden in a major way. Also, a condition of using this tax class is that you must pay yourself a reasonable compensation. Next, using this tax class also requires requires more formal documentation and compliance. So for example, in order to utilize this tax election, you need to file Form 1120S with the IRS to get their approval. And as a rule of thumb, an S Corp usually makes more sense once your earnings consistently exceed over $50,000 to $60,000 and beyond annually. Well, that wraps up the business structures. So next, we're going to talk about income treatment. And here's where things can get interesting with contractor income. So let's start with talking about W-2. Unlike W-2 employment, where your paycheck is pretty straightforward, contractor income requires a little more attention and understanding. So for example, understanding the difference between gross versus net income. So let's break this down in real terms. So if you bill your client $10,000 as a 1099 contractor, that's your gross income, but it's not what you'll keep. You need to set aside money for taxes, you'll need to subtract your business expenses, and the remainder is your actual take-home pay. This is crucial for you to understand because instead of having taxes automatically withheld by an employer, you'll want to make quarterly estimated tax payments yourself. These payments are due April 15th, June 15th, September 15th, and January 15th. You are essentially prepaying your tax liability just like you would if you were a W-2 employee, and missing these can result in serious penalties. All right, how to deal with taxes is something that often surprises new contractors. So remember, you're paying both the employer and the employee portions of their FICA taxes. That's that 15.3% that I mentioned a minute ago. That's 12.4% that's going to Social Security and 2.9% that's going to Medicare. The good thing is that you can deduct half of that on your tax return. But understanding all of this is one reason why your contract rate needs to be significantly higher than the W-2 salary doing that same work. So let's look at a real world example using $120,000 annual income. And hopefully I break this down in a way that makes some practical sense. So let's say you are currently making $120,000 as a W-2 employee. Your base salary is going to be that $120,000. Also, the employer is paying half of FICA taxes, so that's saving you 7.65%. You do have predictable biweekly or monthly paychecks. Taxes are automatically withheld. And in terms of your benefits package, you have health insurance, which is usually worth around $6,000 to $12,000 annually. You're usually getting 401k matching, which is typically around 3 to 6% of your salary. You can get paid time off, which could be worth over $5,000 for 3 weeks. You may have other benefits too, like life insurance or disability coverage as well. Meaning your total package value is often 20 to 30% above your base salary. So what that means for you as a contractor is you need to think bigger. So here's why your rate needs to be higher, and here's how to calculate it. So some people call this the true compensation formula. You calculate it by taking the W-2 salary plus the benefits value plus the self-employment cost plus the tax difference, and that's going to equal your minimum contract rate. So let's break this down using that $120,000 W-2 position. If you add to that base salary of $120,000, let's say the benefits are valued at about $30,000, and let's say self-employment costs is about $5,000, plus we incorporate the tax difference of about $10,000, that means that your equivalent minimum contract rate needed will be $165,000. But here's where it gets even more interesting as a contractor and business owner. You also have the ability to deduct business expenses, the flexibility to earn more by taking on additional clients, control over your retirement contributions, you have an opportunity to build business equity, and you have the potential for passive income streams. So another thing I want to tap into is the concept of business operations. So let me share some essential systems that successful contractors need to put in place as well. This isn't just about organization, it's about creating a foundation for building wealth. First, separate your business and personal finances. By doing this, you want to open up a dedicated business checking account. Next, set up a high-yield savings account for your tax payments. Also, you want to consider a separate account for your business emergency fund. You also want to invest in the right tools from the start, whether that be cloud-based accounting software like QuickBooks or FreshBooks, whether that be time tracking and invoicing systems, or even document management for contracts and receipts, or project management tools if you need that. Another thing may be record keeping. This is crucial for both taxes and business growth. So tracking all your income and expenses in real time, keeping digital copies of all your receipts, documenting business mileage, even maintaining contracts and client communications. Now, the final point that I'll make about the 1099 difference is the ability to take advantage of tax opportunities. Here's where contractors can really optimize their finances because these deductions can significantly reduce your taxable income. For example, if you have a dedicated working space, you may be able to write off a portion of your rent or mortgage by using the home office deduction. You may also be able to write off your utilities, your home internet, and home maintenance. You can also utilize other deductions around technology and equipment, professional subscriptions, marketing costs, even professional development like going to conferences. You can also write off travel and meals with proper documentation, of course. You can also take advantage of retirement and health-related tax benefits. Things like opening up a SEP IRA or solo 401k to get higher contribution limits, or using health insurance premium deductions, or making HSA contributions if you have a high deductible health plan. And the list goes on and on. Now here's a bonus tip. Successful 1099 contractors also utilize the power of timing. And this is a strategy that most people do not talk about. Timing your income and expenses strategically throughout the year. Let me show you how this works. Some income timing strategies may look like billing larger projects in January or February when you have no tax liability yet, or assessing your December billing carefully and deciding whether to push income to the next year. It can look like structuring your retainer agreements to ensure a steady cash flow during slower months. Some expense timing strategies may look like making major purchases in high income years to maximize deductions. Or you may consider prepaying next year's expenses in December when you need more deductions. It could also look like timing your retirement contributions based on cash flow and tax implications. And the list goes on and on. Remember, the point is, it's not just about how much you make. It's about when you make it and when you spend it. This level of planning can save you thousands in taxes and help you build a more sustainable business. So before we wrap up, let me give you a concrete action plan. If you are considering contracting or you've just started, here's exactly what you need to do step by step. First, you need to understand your current financial picture. So I need you to calculate your total compensation, including benefits. List out your salary, health insurance, retirement matching. You want to include any other benefits like life insurance or disability coverage. Review your monthly expenses, both personal and potential business expenses, and include healthcare costs that you'll need to cover. And finally, you want to create an emergency fund. I would say you want to aim for 6 to 9 months of your expenses, more than a typical W-2 recommendation. This just gives you a runway while you're building your client base. Next, you want to choose your business structure based on your specific situation. Research each option, whether it's sole prop, LLC, S corp, even consider consulting with a tax professional. And you want to factor in your state's specific requirements and fees. Thirdly, you want to put these essential systems in place before you start. You might want to consider working with a business insurance agent, a financial advisor, and even a bookkeeper just to help you manage and track your money along the way. Now remember, you don't have to implement everything at once. Take it step by step. Just make sure you have the basics in place before you start contracting. The key is to build a strong foundation that can support your growth. So again, the key takeaway isn't that one option is better than the other. It's just that understanding both allows you to make the choice that best serves your financial future. So whether you choose traditional employment or independent contracting, the most important thing is making an informed decision that is aligned with your goals. So if this information has helped you see the possibilities in your financial future, I want to invite you to take the next step. I'm currently offering 60-minute strategy consultations where we'll dive into your specific situation. During this consultation, we'll analyze your current income structure, identify tax-saving opportunities that you might be missing, create a customized strategy for your business setup, and even map out your next 90 days of financial move. Because here's the thing, every person's financial situation is unique. So while the general strategies that I've shared today are powerful, having a personalized plan can make all the difference in your financial success. So to book with me, just click the link in the description below. And with all that said, don't forget to hit the subscribe button and notification bell to stay updated on more wealth building strategies. Until next time, this is Njideka. See you soon.